I have mentioned this in the past. There is a connection between attention on an asset and the price. The more attention there is, the higher the price tends to be. Thus, it's interesting that a lot of people still have their eyes on the Pi network while the price is crashing. Have a look at this here. This is the most viewed cryptocurrencies on CoinGecko recently. And Pi network is by far the worst performer. It went down by 35% in the last week. In fact, it's the worst performer across all cryptocurrencies in the top 100. Now, what's going on here? If so many people are still interested in Pi network, why is the token doing so poorly? The statistics on my YouTube channel are also in line with that attention metric on CoinGecko. People still search for the token, and the recent video outperformed the average video. The average video is here in gray, and that last video is in blue. And just have a look at the top performing videos in the last 90 days. This is a Pi video, this is a Pi video, over here as well, over here as well. 4 out of 10 videos are about Pi. And I'm definitely not making 40% Pi network videos here. And so if it's not the number of people that watch a token, if it's not the attention on the token that's driving the price, because price is going down, views are up, what's actually moving the price here? One potential explanation is leverage. What we see over here is the trading volume on the spot market. So this is trading Pi tokens directly. And there is 69 million worth of trading volume on Gate.io in the last 24 hours. Compare this with the perpetual futures. Over here, we've got 158 million worth of trading volume. So it's the levered bets on the price. It's the derivatives. It's not the tokens directly that move hands. It's the bets on the price that actually bring the price discovery. Now, if it is leverage that moves the price, then that also explains why we sometimes get those violent moves to the upside and to the downside. Because whenever we see this, this means that a lot of people potentially get liquidated. If we put leverage on an asset, we've got a certain price where we might lose everything. And if there are enough people that take on all of that risk and that could lose everything at a certain price level, then the market makers might actually move the price just to that place in order to gain all of the liquidation fees. I mean, just have a look at this chart. This is the Pi price relative to Bitcoin over time. There's a ton of volatility from top to bottom. It's an 85% drop. But what I find more interesting is that when we look at the exact details of the price movement, how much of random spikes we get. Over here, it's all the longs that got liquidated. Then the price shoots up. Over here, it's all the shorts that got liquidated. And so in the span of just 8 hours, the price doubled. And that's with a token that's got a market cap of 5 billion. So the Pi on the spot market isn't really liquid. It is owned by the market makers. And because of that, they can push around the price to their liking. It also explains this secondary pump and dump, because prior, a lot of people might have bet on falling prices because there might be some constant selling pressure, right, from people that made KYC and that mined Pi on their mobile devices. People might have bet on falling prices, but then comes one short liquidation, another one, until everybody is clearly out of the token. This was a rally of 166% that subsequently deflated again. So really, the fundamentals here don't matter for the price. What's really going on is that Gate.io has a lot of the tokens and is also offering bets on the price. It's like a sports betting house, right? A sports betting house that offers to bet on the outcome of, say, a soccer match. But at the same time, they also bought the referee. They have an impact on how this game will end. And so that's then a perfect money machine, right? When enough people get liquidated, the centralized exchanges make a ton of money. There is, of course, a limit to that manipulation. We are likely not going to see the old all-time highs. If you're just reaching the heights of the 12th of May, so 1 week ago, the air might already getting thin. So this could be relative to Bitcoin. It could also be relative to Ethereum. With Ethereum, we see that the selling pressure is a bit more constant. And so yeah, have a look at this, right? This is the funding rate history on Gate.io. It peaked on the 12th of May at 4 o'clock. And that was over here when the price spiked. So a lot of people were betting on rising prices to then afterwards get crushed. Have a look at OKX at the long to short ratio. Most people bet on rising prices. And so at some point, this thing always has to come down again. Now here's a potential strategy that we can deploy. If the price gets manipulated that quickly in either direction, we can enter a short position with a limit. So we want the price to rise to a certain level in order to enter a short. Or we can enter a limit buy position. So we want to see the price fall at least to a certain level in order to execute the purchase. So let's say we were over here in the price and we just put into the system that we want to buy some pie after a drop of 20%. We would have quickly scooped up the cheap tokens over here. And then we can do the exact opposite, right? We say we want to short after the price goes up very quickly. And so instead of getting liquidated because we bet on the current price, we do the exact opposite. We expect that there will be liquidations and we're just entering with short positions as the price rises. And we can do this with a lot of leverage and very tight stop losses. So for example here, that's why I made those horizontal bars. We could enter a short position that would only execute after the price rose by 30%. So if we do see another short squeeze, we would enter after the squeeze. If we then continue the squeeze, we might get liquidated on that particular short very quickly, right? We use small amounts with high leverage and then we enter the next short again. We try it again, maybe that fails again, then one more time, then one more time. At some point, the price will revert back to normal. And then we are in a short with a ton of leverage while the price is going down by 50%. If we have a 10x on that, we will 5x our money. The opposite, of course, also works with purchasing orders. Of course, with purchasing orders, it's a bit more risky because the long-term trend is not necessarily positive for Pi. This is all just manipulation. And the token of the day that currently gets manipulated the most, where there's most active trading volume on the perpetual futures, changes over time. And so whatever gets manipulated in either direction tends to mean revert again. We do not want to bet against the long-term trend. So having some limit orders on shorts is better than having limit orders on buys. Now, to a degree, the crypto market is just a reflection of unregulated life. As in, most gains come just to a few people, to a few assets. The vast majority tends to lose. So if you're just taking a broadly diversified portfolio of assets, we're likely going to not perform that well. Because here's the thing, crypto does not have any regulation. Everybody can launch a coin, and so there's no real barrier to entrance. And because of that, we tend to see a lot of fraud. We tend to see a lot of setups where tokenomics are rather poor, so where the average investor tends to not make money. And so when crypto cannot create money out of thin air, when it's actually a sophisticated system of moving money from the not so well informed to the better informed, then how can we become better informed over time? Because surely there's also a luck component involved, but there are some people that tend to win long term. Now, it's obviously not easy to become part of the minority. If we are not launching a project and we know more than the rest about that project, then how can we still become insiders? I think the best answer is to try to figure out what the insiders are doing and then simply copy trade them. For example, over here, we've got the Martini guy, and he bought the Chippy token when the market cap was still at $455,000. Now have a look at the comments on that wallet signal. The Martini guy tweeted about Chippy 2 hours after he has bought himself. And so since we are in a market without much regulation, and since we are in a market that does not produce any wealth, it's just transfer from one to another, it's all about figuring out an unfair advantage. And the unfair advantage of Martini guy is to simply have a following, right? He's just buying and then he tweets about it, and then the price goes up by more than 50% in just a few hours. Here's, by the way, his YouTube channel. He's got 150,000 subscribers. And so when we know what the insiders are doing, when we know what the influencers are doing, we can replicate those trades. Now, the art is in finding the right wallets. And we are tracking 12 wallets of Martini guy. In total, we are tracking more than 500 wallets. So 12 are by Martini guy, but we've got a lot of other influencers as well. For example, check out this signal over here. This is YouTuber Jesse Eckel. He bought $10,000 worth of the winner token on the 2nd of May. And surprise, surprise, on the 6th of May, he published a video about the winner token. And so, of course, the price also appreciates in the top by almost 50%. And so really, it's a game of attention. It's not a game of fundamental analysis. Most YouTubers, they simply just buy the asset and then they promote it on their channel. And then later on, they might sell it at a higher price. Don't get distracted by all the noise. We're also following Alex Becker, for example. So we've we've got 12 of his wallets. We are tracking Crypto Banter. We've got 33 of their wallets. And here we've got Brian Young, who by the way bought the virtual token extremely early. And we've got 5 of his wallets. So how do we get all of that data? How do we know what influencer holds what kind of wallet? And how can we then create those signals that we can actually buy and sell with them? The answer is through on-chain analytics. So there are several approaches. We can, for example, look at what kind of NFTs does somebody hold. We can then see, are there maybe potentially deposit addresses on centralized exchanges? Did other major deposits happen to the same kind of wallet? Are those wallets potentially connected? We can also look at prior purchase histories. So let's say we've got an influencer that talked about very small altcoins in their Twitter or in their YouTube. And then we look at wallets that held all of those altcoins and that potentially bought them also before the tweet or before the YouTube video. Then we've probably also got the right wallet. We can then afterwards confirm this, right? We can look at what is the wallet buying next. Is there again another tweet or another YouTube video on this? If the answer is yes, it's probably the right thing. We're then continuing to track it. And so I've made an entire video playlist on how to find different wallets and how to track them, how to then get the signals and how to interpret the signals. And so our entire community is trying to find new wallets, discussing this in the wallet research channel. And then once we found an agreement, we add this to our influencer trade tracking channel. And so the idea is pretty straightforward. We're trying to generate as much outperformance as possible that in the end, the membership more than pays for itself. Now there is some funds needed, right? We can't just trade with a few $100. I think the best portfolio has at least $5,000. Once you are at 5,000, you should be able to make that money back. Now, if your portfolio is larger, then you can consider to potentially sign up for yearly as well. First of all, there's a discount involved. So there's $250 off. But secondly, there's also a 1-hour free Zoom call. So in case you've got a larger portfolio in crypto, but also outside of crypto with other asset classes, and you could benefit from a direct one-on-one call, the yearly membership might be for you. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.